Did you know there's one indicator that crypto traders recommend above all others? It's Bollinger Bands. That's right. Seasoned crypto traders swear by this tool, using it to uncover hidden signals and stay one step ahead in the market. Bollinger Bands are a powerful indicator used to measure market volatility and identify potential buying and selling opportunities. Created by financial analyst John Bollinger, this tool adapts to the market's price action, expanding and contracting based on volatility. Imagine being able to see when the market is about to break out or when it's about to cool down, all in real time. That's the advantage Bollinger Bands offer. Now here's where it gets interesting. Each band has a specific purpose, revealing hidden clues about market momentum. And in a moment, I'll explain exactly how they work and what each band means. But if you're looking for an in-depth read on this tool, check out the link below to visit a blog on our website. Now, how does Bollinger Bands work? Bollinger Bands consist of three main lines: the middle band, an upper band, and a lower band. The middle band is a moving average, which gives us the overall trend direction. The upper and lower bands are typically 2 standard deviations away from the middle, acting like guardrails to help us interpret the range of price movement. Main points to consider. When prices touch or move beyond the upper band, the market might be overbought, signaling a possible pullback. When prices dip to the lower band, it often means the market could be oversold, hinting at a potential buying opportunity. For example, imagine a stock moving steadily upwards. As it touches the upper band, savvy traders may begin to sell, expecting a reversal. Conversely, if the stock drops near the lower band, it may be a sign to buy, assuming a bounce back. But here's the real power move: combining Bollinger Bands with other indicators to confirm these signals. Let's dive into that next. For a reliable setup, many traders pair Bollinger Bands with the RSI, Relative Strength Index, to confirm the trend. RSI measures momentum on a scale of 0 to 100, giving insight into whether a market is overbought or oversold. For example, let's say a stock's price is touching the lower Bollinger Band and the RSI is showing an oversold reading below 30. This double confirmation could be your sign to enter a buy position, anticipating an upward reversal. Similarly, if the price touches the upper band and RSI signals an overbought condition above 70, it may be a good time to consider selling. If you found this strategy valuable, give this video a thumbs up and let us know in the comments which indicator you'd like us to cover next. Don't forget to subscribe and tap that bell icon to get notified whenever we release a new trading video. For a deeper dive into Bollinger Bands and more trading strategies, visit BrokerCheck Academy at the link below, where you can learn about trading for free.